We have several financial companies going public this week. The biggest one is ING. It's over $1 billion. Francis, when I took a look at this, I was very impressed that the profits were up last year. And interestingly enough, this is not the ING online bank. It's the insurance spinoff of the Dutch-based bank. So, I mean, it looks pretty good. What do you think?
Yes, I like it. ING, the parent, is a Dutch-based company, as you mentioned, and I think they're getting pressure from the government to put more liquidity into the parent company. ING USA is at the midpoint of the price range is $5.8 billion. A market cap is about $1 billion for IPO, and the proceeds are going to give more liquidity to the parent. But what's interesting is the revenue for 2012 is down from 2011, but they were unprofitable for 2010-11, but they were profitable in 2012 because they reduced their expenses and their benefits. And if you annualize the income that's allocated to them, it's coming at 12.5 times earnings. You can compare that with Lincoln National, which is about 7 times earnings, or Hartford or MetLife, which are both more. The book value is about 5.6, so it's a very good book value. I think what's had the comments are that it's been undermanaged by its Dutch parent. And so on its own, it'll be probably motivated by stock options and that kind of thing. So I think the performance of ING USA is going to be much better. So I think it's a buy-in on the IPO, and it's kind of one of these companies that are in a sector that people don't really understand. But if you look at the multiples, the comparative multiples, it's pretty simple. I think that it may even be a good buy in the aftermarket.
Okay, then we also have QIWI. Now, QIWI is a payments processing company. It's based in Cyprus. It has a lot of Russian exposure. Does this make you nervous to get involved with a bank that's based in Cyprus in light of all the problems they've had?
Yeah, sure. Cyprus is worse than the Cayman Islands, of course. And the shareholders have the company just simply is not accountable. No way, Jose, just not happening. But in Russia, 94% of their payments are in cash, and they do payment processing, and they have mobile wallets and reloadable debit cards. That part of their business was accounted for 30% of sales in 2012, and it's growing about 100% a year. So it's coming at a PE of around 25, which isn't bad for that kind of growth. So I think that's probably okay on the IPO. I would not be comfortable holding it based on what you said about Cyprus and Moscow.
Then we have a REIT coming out. It's Ellington Residential Mortgage REIT. They are looking to raise $130 million. And of course, as with most REITs, they're hoping to do a big payout. So is this something that is a traditional REIT that people could get involved in?
Well, I look at it and I say, oh my God, not another IPO mortgage REIT. The reason I say that is the last 5, if you go back about 2 years ago, traded down the first day. Some of them have come back. There's a lot of big mortgage REITs that are already established, already have a track record, Annaly and a lot of others. So I just wouldn't chase after this one. It's coming at 1 times book, and that's what all the others have come at. I mean, if it goes up, it'll be completely against the trend that's been established the last couple of years. So I would stay away from that one.
All right, so there you have it. If you are taking a look at these financial REITs, you'll want to look only at maybe ING, not at QIWI, and definitely not at Ellington Residential.